Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's September 8th. This will be our chart lesson for the day, and another up day. You can see we opened lower here, reversed, and traded higher. We didn't close quite on the highs, but we did close near the highs. So this market continues to try to push higher. We definitely closed higher, um, as on Friday we closed at 64.89.75, and today we closed at 65, or I'm sorry, we closed at 65.07. Yes, so definitely closed up. Again, we didn't quite close on the high, but I'd call this, it really was kind of a range day that closes near the highs. That's how I would describe this day. It was mostly sideways. It looked like we were going to sell off at one time, and the market broke lower, failed on the breakout, and traded higher again. So let's flip over to that other chart, to the 2,000 tick chart, and take a look at it. We'll go through the trades, and we'll get this day wrapped up. And you can see it here. We were mostly sideways, broke out to the upside, failed, turned, broke out to the downside, failed, and traded back up near the highs of the original range. And notice here on the breakouts that we traded a perfect, exact measured move up, and it looks like we might have missed it by a tick to the downside. It may not even be a full tick there, but we got really close to a perfect measured move to the downside, and then we rallied from there and closed near the highs. So interesting day, mostly sideways here. We did have a trend up and then a trend down, and there weren't I mean, there's quite a few trades here today, but there were some periods where you just had to sit tight, and there's not much you can do about that. So it gets hard to trade this stuff, especially when you're not turning at consistent areas. And you didn't have that for most of the day, so you had to, at some point, you had to trade the breakouts or the trends, trade the actual trends. And so you got a bigger two-tiered trend coming back down here, but you've got multiple tighter trends within that. But anyway, let's zoom in here and go through the trades. Um, 7 o'clock came when we're in this downtrend here, and then it reversed. And then we're just kind of up and down in here. And I didn't really see anything that you could actually trade that I liked in here. You're not getting good enough signal bars at the edges, and they're not consistent really anyway, so you got to be real careful. I did like this second entry here. Notice you're working down, you get a close outside the new low, and then you're working up, close outside new high, and you get a second entry short there. It's close enough up here where we've been turning down that I think you can take that as a second, with that being a second entry. I think and plus this micro trend up played out. So I think you can take that trade. That did turn out to be a pretty nice move back down, and you make a perfect double bottom down here and turn up there, and again you get a close outside new low. Fairly bullish bar. I think you can go long again there, and then you end up working back up. This one would be tempting here because it's probably going to act like a trap, but I just sit tight. It's never smart to go long or short right in the middle of a range, and so I think you have to skip that one for that reason. Comes back up here, it turns down near the previous highs again, but I don't think that signal bar is good enough. Um, just the way that sets up, I think you need a lower high or something there, and you just don't get it. It runs down, breaks out, and you get a little failed break lower there. That's definitely lower than the last 1, 2, 3, 4 attempts to go lower. And and you do get a close outside and a new low all in one bar. And so maybe you take that trade. I think you're better off to wait on the higher low, which comes here, and it doesn't give you a setup. And so I just think you're better off to skip that. I did mark it green. If you want to be a little aggressive, that's probably where you do it. So I just don't think you got a convincing enough close with just a first entry there. And you're really not looking for second entries in a tight range like this, but you need a good setup down here. And so a high or low would be the obvious choice, and you just don't get one. Here, Notice you're moving up, close outside new high, and you do get a second entry there, but the green one is your signal bar. So here, maybe you get a lower high, and you do, but you don't have room to scalp out now. It wouldn't have mattered if you took it, but you don't know that in advance, and for that reason, you can't take that trade. Notice how it tried to bounce there several times before it finally went lower. And then, of course, you did get a close outside and a new low here. And then you get a higher low with a very bullish bar. I like trading that as a failed breakout on a higher low. And it looks like it's only going to get a scalp or so, but then all of a sudden it takes off. And that's what I'm always telling you. If you're going to gamble a little bit and take a green type trade that's a little more aggressive, this is where you do it on these failed break lowers, because they often end up being important lows or highs depending on where you break out. In this case, this was an important low, because from there we pretty much went straight up, 42 bars by almost 18 points. That's not as big as move as we've gotten on some of them on the failed breakout, but that's a pretty good move. And then you're just bouncing around all the way up here. You finally get a second entry here right off the key entry point, higher low, second entry long. I like that one. You're probably only going to get a scalp out of it, but it ends up going higher, and a perfect measured move. So maybe you take that short right there. It's a nice signal bar, but you're probably better off to wait on the lower high, which comes here. I'd rather enter there personally. Comes back up again. You might look at this as a second entry, but I don't see an entry there I like. If you took either one of those signal bars, which both of them are bullish, but you don't really have a close outside and a new low yet. You got a close outside here, but no new low. So it's a little risky. So I don't like it. I wouldn't take it, and I didn't mark it. But it runs up, and then it gives you a lower high here. Technically, you get a close outside, and I think it makes a tick higher, if I'm not mistaken, 65, 16, 50. It just makes a double top, so you can treat that as a lower high. Even if it made a higher high, I'd still trade that, because it's giving you you've basically got at least a triple test by that time. So I like the entry regardless, whether it makes a new high or not. And it turns out to be another nice move down. Just the bottom just kind of drops out of it right back to the lows again. Here you make a new low, but that's not a convincing close outside. So it looks like you do get one, and then you get a first entry, tries to go higher again and fails and turns down. You get a second entry short right there after following a failed breakout and some pretty good moves down. So I like taking that second entry short right there, and this turns into another little trend channel down. And then you get a close outside here and a second entry short. Normally, I'd probably tell you to skip that second entry and wait for it to get back to the trend line, but I think you're still really playing the range here, and you're also playing the continuation of this channel. You're probably going to make a retest of that low, so I tend to like that one. Plus, it's really kind of it's not kind of, it really is a sideways range as well. I probably would have moved this down like so at that point. But either way, you're still closing back inside the range. It's a second entry. You're expecting a retest to the low. It's a good signal bar. I mean, you got everything working in your favor and more than a couple of reasons to enter there. I like going short there. Again, a lot of times I'd tell you to wait for it to get back to the trend line, but we're in a bigger trading range here. That's kind of been the pattern, and this trend channel is not even confirmed yet. So really, you're just playing this channel, and you're expecting a new low, and you would expect prices to come back at least to the low of the range as well. So for that reason, I like that one. But it runs down, another failed breakout. You do get a close outside and a new low on this retest. You could argue for that to be green. I didn't mark it because I think you need a higher low there, because now your lows are more down here. But that does take off. There is a higher low here, but you can't trade that. That's not tradable. But notice you got the trend working up, close outside, move to a new high, and then it makes a lower high. And this is a double, this actually makes a new low lower than that one. I'd treat that like a double bottom, but for all intents and purposes, it does make a new low, so your count's over. So first entry, second entry. So a break below that bar is a second entry. It's also a lower high, and it's your first break of that trend channel. So there's a good chance we're going to try to retest this low here. And so off it goes to the downside. Now, we didn't really confirm this trend channel because this broke through, but that doesn't matter. You can still see it's getting resistance there by the time you enter here. And so I think you can treat that like a trend channel, even though it didn't technically confirm it with 3 touches and without a break first. So, but it runs back down. Where does it find support? Right at the original range lows. You might consider going long here. I don't like it. It looks too congested. This bar almost looks like a doji. Does it close in the upper 1/3? Probably. But with all those other bars with tiny bodies and the fact that we hadn't made a new low yet, I'd sit tight. And notice it runs up, close outside, tries to make a new high, and gives you a second entry short right there. With a nice bearish signal bar. I like going short there just to see if it's going to make that retest. At the very least, it'll probably retest this, which you see it does get some support before it drops on down. And you might have caught a runner on this one. If you do, you can ride it all the way down. And where does it bounce? A perfect measured move out the other side. And you get a big bounce there. You don't get a new low there. So do you have a close outside on this one yet? It's questionable. I don't think you do. I think it looks more like that right there. So I don't think you have a close outside until here, and you don't have a new low yet. So it tries to make another new low on this move down. Now this is a retest. The reason I drew this back down is because it's also a range day. So that would be all you needed to reverse. So you don't necessarily have to get a retest of this channel, but you might. So draw it, whatever. So the fact that we went a measured move, you might argue for that to be green. But if you drew this down, I'd say wait, because there's a good chance to get a retest on it. Moves up, you get a little 2-legged correction, and it's off again. So that's a second entry long there, and we do have a break and a new low in place. The problem is you got to go long right into the EMA, and I'm not crazy about that, especially since that's such a big bar. I mean, for today, that's a relatively risky bar. Now it does break lower and turn up and go outside and surpass this on the engulfing bar, but most of you shouldn't trade that anyway. And you can see you got a little double top and you got a little double bottom. So it looks a little like a little, well, let's just draw it so I don't have to describe it and you can see it. I mean, what does that look like to you? It looks like to me a range. And so you got to be careful going long there. I just don't like it. And it does take off, but you don't know that in advance. And of course, you get a close outside. It tries to make a new high and fails and turns back down and then comes back up on a triple test and gives you another signal bar that qualifies, that makes that a second entry short too. So maybe you go short there. I marked it green because we just had a failed breakout, so you would expect prices to try to come back up here. But there's reasons to like that trade, and you do have room to get out. So if you took it, I'm okay with it. I would say it's green. But then you get another one here. It does get a close outside and the new low all in one bar. And you can argue that's a second entry long. I didn't mark that one. It's another one you may say, okay, I'll at least give that green, because some of you might have taken it. I don't know. I'm not crazy about it. It's really hard to know what prices are doing right here, and that's one reason I didn't mark any of them red or blue, because from here prices should have gone higher, and they didn't. They turned back down again. And so it's like the market's unsure of what it wants to do here. It's not really following its normal pattern. And when you see that, you got to be real careful trading. That's a good enough reason to maybe just sit tight. Of course, it runs its way back down here, gets a close outside, tries to make a new low. That's just a first. That's actually not even a first entry. It's like a one, two, third entry. So and it looks sideways and congested. So I'm not going long there. Um, and that takes us into 230. So you didn't get another chance on it. There was we actually made a double top here. So you could have called that a first entry or a second entry, but it's after 230 and it's not a good signal bar anyway. So it doesn't really matter. So there it is. That's how I saw it. Are we going to go higher tomorrow? We'll have to see. We'll just have to see. But this is a good idea. You know, people are always talking about patterns, and I tell you can't trade patterns. But here's a great example. This looks like a classic head and shoulders pattern that people say should lead to a sell-off. What does it do? It just traps the shorts and turns right back up again and closes right back in the middle of a range. So don't pay any attention to those patterns. You got to understand price movements. You can't trade patterns alone. They don't work enough. They're not consistent enough that anybody can make money with them. You got to understand the context of what the chart is telling you is 100 times more important than the pattern. All we use the patterns for that we use, which you'll never see us use head and shoulders, pennants, any of that stuff, because none of them are predictable. In fact, they'll oftentimes break out both ways a couple of times and fail, and before they ever decide what they're going to do, and they end up trapping everybody and fooling everybody, whether you're long or short. That's what usually happens when you try to trade patterns. So don't try to do it. Understand that you got to be able to read the chart, and you got to understand price movements. First and foremost, price movements. And so we only use the patterns. We're looking at the context of the chart, and we're looking for where the support and resistance is, which is where we want to try to enter with the support and resistance helping us. And so we're looking for those places first, and then looking for the patterns to set up that we like to trade, which aren't pennants and flags and head and shoulders and all that nonsense. None of that stuff is reliable enough again. So we're looking for patterns that help us enter the market with the right timing and the right price at the right place. But first you got to know where the places are. So if you can't find the places, you can never have much success at this. So you got to understand how to read this chart and understand the context of what the price action, the structure of the price action, what it's telling you. And sometimes it's hard to determine. And that's what I was talking about in here. We should have been going higher based on the rules of price action and how prices move, but we weren't. So it gets confusing, and you don't know which side's going to win out. And so when it's like that, just sit tight. Unless you get a setup like we did up here where you get these multiple touches, just sit tight. When you're unsure what prices are doing because it's confusing, the only thing you can do is just sit tight and wait for it to gain clarity. Now there were actually, I said we should have been going higher. There was actually there was reasons to think prices should be going lower or higher. So that's why it's confused here, because there is a channel working down that you probably need a retest on, but there is the support of the range that we should be going higher here. So you got two patterns fighting each other, and you don't know which one's going to win out. At one point, the range was the dominant pattern, but on the way down here, this two-tiered channel obviously was the dominant pattern because you had the break and moved to a new low before it went back to trading in the range again. So this pattern became the dominant one, and you don't always know which pattern is going to be dominant. So when you're caught between two competing larger patterns like that, where the chart is unclear, that's where you sit tight. Unless you get a really clear setup, which you notice I did mark a couple of them here. I think you had enough resistance right there to know at that point when you were expecting a retest that maybe this one was going to win out. But just be sure of what you're looking at and make sure that the pattern is there, and that that you're reading it properly. I guess that's the best way to put it. But yeah, as far as head and shoulders and reverse head and shoulders and pennants and flags and I forget what all those things are. Just don't try to trade those things. You're just going to donate. You're just going to be a donor. You're going to donate your money to people that know how to read a chart and understand price movements. And so don't be that person. When you're unsure of what the market's doing, sit tight and wait, because it won't be long that you'll get another opportunity and it'll be clear. And if you don't get another opportunity, at least you didn't have a loss. No trade is better than a losing trade any day of the week. I'd rather see some of you sit here for 2 hours in a 2-hour trading window and make no money than to sit up here and have 2 or 3 losses. Because at least you're preserving your trading capital for when you do learn to trade and learn to see the chart and understand what's going on. And most people don't have the patience. They just insist on going live too soon. They donate all their money. And then by the time they do figure it out, they don't have any money and they're so discouraged they just give up. Don't be that person. Do not be a donor. The market needs donors. For traders to make money, you need donors to lose money, because this is a zero-sum game. For every dollar you make, somebody else has to lose a dollar. So for you to be right, somebody else has to be wrong. And the really good traders, the really experienced and the best traders, they don't lose. That's why 10% of the traders end up with 90% of the money, the other traders' money, because 90% are going to be donors and the other 10% know what they're doing. So until you become in that 10% and know what you're doing, don't trade live. And throw out all this hogwash of patterns that, these that I just talked about that don't work, and especially trying to trade indicators that are based on what happened back over here more than what's happening over here. Back over here we were in a range. Over here we're trending down, then we're trending up. So whatever happened over here that most of your indicators are going to tell you are going to be wrong. Stay away from those things. They do not work. Yeah, somebody can pull out some charts and show you some places where, if you were following this indicator, you could have entered here. But it doesn't happen consistently enough that you could ever make money. And in the end, you'll lose your shirt. And that's what happens in those things. So don't fall for it. The only way to make money is to learn to understand what the chart is telling you and to understand price movements overall. That's the only way you'll ever make money at trading. And people, I've been meaning to mention this. That made me think about it. I'm going to wrap this up here after this. But I've gotten several people ask me about AI. Am I worried about AI? I see nothing in here yet that tells me AI is going to change anything. Because all they're going to do is, if the program's smart enough, it's going to follow the price action. If they can come up with AI that can learn to follow the price action and understand the emotions and the total decisions, that's all we're doing here. That's all this chart consists of, is all the combined trades together of all the traders in the market based on their thoughts and emotions. That's what this is. And if AI can determine that, they can trade along with it. But how are they going to change it? I mean, for every buyer, somebody's got to sell. So if AI is all they're doing is buying because they like the fundamentals, then that's going to make it easier, in my opinion. You just get on and go with them because there's nobody selling. You can't tell me that AI is going to be all buyers and all the live traders are going to be all sellers. It's not going to happen like that. So I reserve the right to change my mind at some point, but so far I see no evidence that any software or any AI or anything's going to change the market right now. And I've had that argument. People say, well, this used to work, but it doesn't work anymore. I've been trading this for 25 years, and it works exactly the same today as it did then. Sometimes it moves faster, and sometimes it moves slower. Sometimes you have bigger bars. Sometimes you have smaller bars. but the basics of what we do has not changed in one iota in 25 years. So don't let somebody make you believe that. That's just somebody that can't trade, that don't understand what we do, that tries to tell you that they're smarter, and they're not. So, or they're just failing, and so they blame it on the strategy because they can't do it. So that's what happens. And you go reading this stuff, and don't listen to most of what you read on the internet. Don't believe what I tell you. Go do your own research and find out. Prove it out what I'm telling you. Don't just take it for face word. Go prove it out. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.